Kia ora, I'm David Chaston with 98.9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news of new inflation risk from the dramatic Suez Canal blockage that will upset most global supply chains. But first, in the US, there was a very sharp drop in initial jobless claims last week, falling more than 100,000 to 657,000, and the lowest in a year. This is very much lower than analysts were expecting. And the next regional factory survey in the US, this one from the Kansas City Fed, shows the solid expansion well embedded with strong new order growth. But this latest survey continues the reporting that input costs are rising fast, and most firms say they can pass most of them on. The US Treasury had a big bond tender overnight for its benchmark 7-year note, and the yield rose to 1.3% and well above the prior 1.2%. $150 billion was tendered for the $73 billion that was accepted. Today's result takes the yield back to higher than a year ago after the suppressed pandemic falls. In the dramatic Suez Canal blockage and shutdown, it is now expected to take weeks to clear the problem. The blockage is creating long tailbacks in the waterway, with more than 150 vessels currently waiting in the area to pass. The alternative Cape Town route can add 2 weeks plus to the journey. There will be a global impact from this problem, sharply increasing shipping costs and container availability everywhere, all adding to an already stressed and expensive problem. In Canada, their housing regulator is pointing out the vulnerability to a downward price correction there. Toronto is the key market at risk, but these risks of overheating are spreading to other cities, they say, and the coming correction could be sharp. In China, a different kind of supply chain problem is growing. The boycott of the use of forced or slave labour in making Chinese cotton is seeing Beijing force its e-commerce firms to remove the products of companies who adhere to that boycott. It is an issue that is further fracturing relations between West and China. The Australians are calling China a vindictive and unreliable trading partner, an escalation that is sure to draw a response. The US Treasury 10-year yield is unchanged at 1.62%, and the price of gold starts today back down $7 in New York to $1,728 an ounce. And oil prices have given up all of yesterday's recovery and more, down $3 a barrel, and now just on $58 a barrel in the US, while the international price is now just under $61.50 a barrel. And the Kiwi dollar opens today even lower at 69.6 US cents, with an extended devaluation that has now reached 4% over the past week. Against the Australian dollar, however, we're holding at 91.7 Australian cents, and against the euro, we're also holding at 59.1 euro cents. Today's shifts are again all about a rising greenback. That means our trade-weighted index opens today marginally lower at 72.2. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.